Isa, Isa, have you had your snack?
Yes, for sure. Gotta stay fueled for this awesome session ahead. Actually, it's a bit hot here in Manila, but it's great to see everyone still excited and ready for the awesome webinar, and that's great. A big shout out to the 2 million viewers who's tuning in live right now. So, Jess, how's the weather in your end?
Well, we had quite the downpour of rain earlier here in Bicol, but it eventually cleared up, and the show must go on, right? I'm really excited because we've got something extra special today. Our guest is joining us all the way from Canada. How exciting is that?
Actually, it's really exciting, and I can already feel the excitement here in Manila. I see some of you came in early. It's a good thing, right? So, well, maybe because some of you already know who our special guest is.
True. We've got a very special guest, but before we introduce him, let's make sure everyone is ready. Everyone, can you please type ready in the chat box if you're all set to go?
Okay, I think we're ready now, Jessa.
Okay, they're typing ready. Look at all those
Sir
readies.
Mark,
All right,
Sir Mark is not ready.
not yet ready. Let's keep that energy going. Before we begin, let me quickly go over a few house rules to ensure we have the best experience today. Please keep your microphones on mute when you're not asking a question to avoid background noise. And we encourage you to keep your cameras on so our guests can see your beautiful and handsome faces. If you have a question, you can raise your hand, and if you're a bit shy or introverted, feel free to type your question in the chat. But we'd love if you could unmute and ask your question directly. It's always more engaging that way.
Yeah, you're right, Jessa. And just to give you a little more context, today's session is all about Canadian taxation, and it's gonna be a purely question and answer format. So get those questions ready, all right? And before we dive in, we'll be going to have a quick introduction for anyone who might not know us yet. So, Jessa, would you like to start?
Sure. Again, hello everyone. I'm Jessa, a full-time mom and an aspiring real estate bookkeeper. I'm super excited to be here with all of you today. How about you, Isa?
Yes, hi everyone. I'm Isa, a full-time mom since 2016, and I'm now currently exploring the world of freelancing. Like Jess, I'm also venturing into real estate bookkeeping because our mentor Melonas inspired me to do the same. And of course, I'm excited to learn about our topic today because who knows, maybe I might get influenced by our speaker.
Oh, that's why we click so well. We have a lot in common. So here's what lined up for today. It's going to be a question and answer session focused on Canadian taxation. Just to be clear, our guest won't be doing a formal presentation, but he's here to answer all your questions and share his expertise.
Yes, and now it's time to introduce our guest. He's a seasoned accountant with roots in the Philippines, currently based in Vancouver, British Columbia, Canada. With over 10 years of experience running an accountant firm using Zero, he has developed an extensive skill set and deep industry knowledge. He's also a CPA in the Philippines and is currently pursuing his CPA designation in Canada. And beyond his professional achievement, he's a dedicated father of four, managing his accounting firm alongside his wife. That sounds impressive. All right, so without much further ado, let's give a warm welcome to the amazing Mr. Mark Virgil Lofranco.
Well, we have
Yay!
Okay, welcome, Sir Mark. I, I guess we have a Canadian tax expert here. I'm sure everyone is super interested to hear what he has to share. But, Sir Mark, before we dive into the questions, could you start by giving us a quick overview of Canadian bookkeeping and taxation?
Okay. Yeah. Can you hear me? The sound.
Yes, we can hear
Yes,
you
we
Okay.
can.
clearly.
We
Cool.
can hear you.
So, by the way, I am Mark. I am pursuing. I'm a father of four. My wife is in the. She's not a bookkeeper, but she's into real estate bookkeeper, just like Jess and Isa. So, she's really good at what she do. But she's not a bookkeeper. She's just doing support now, doing a lot of bookkeeping related for the real estate. So I am an accountant. I'm also a student for CPA Canada. So I've been pursuing my CPA Canada. I'm done with Core 1 and Core 2. I still have four more to go. Um, I am an accountant starting at 5 a.m. every morning until 11 midnight. So I have a day shift as a Canadian accountant, and I have a night shift as a Filipino accountant. Okay.
Mm. Wow.
So I still have my firm. So I've
Quite
been doing
busy, sir.
so. 5 a.m. is a starting point. I always listen. My role is always the 5 a.m. rule. So as much as possible, I wake up at 5 a.m. I do my studies, learning from all online courses that I have availed. Um, right now, we are into a 2 weeks break. So I have a chance to learn all of this taxation. Um, and then I do my job every day being a bookkeeper, an accountant, or a tax preparer. So I would like to emphasize that one that it's very important that you will be, you know your roles in the organization. Who are you? Are you the accountant? Are you the bookkeeper? Or are you the tax preparer? Or are you the CPA? So it's very important. Those are the important things I have learned when I entered Canadian CPA Canada, that having a role is just as important as knowing yourself where you are. You know, it's very hard to speak purely English when you're a Filipino, right? But I believe
Yeah, you're right.
You're
this
right.
is this is English, so, because all my webinars is always a Taglish or Tag Bisaya English because I am a Bisaya. But I'll do my best to speak slowly and in English. Okay. Okay. So just to give you an overview. So why do I promote Canadian bookkeeping? Because my market is not an outsourcing market. My market is all based in British Columbia. Those market that are going to the office, talk to my time zone, and wants help for us. Where in which I can call CRA, I can guide them within British Columbia or within Canada. But for me, it's a huge province. So I'm focused on one province, British Columbia. Even though I have my own clients, like in Alberta, I have Manitoba, I have Ontario, I have those clients. But my primary focus, 80% of our client is based in British Columbia. Okay? So in your case, you can always do a bookkeeping. I do not recommend, like literally, I don't recommend you to do a tax filing for them because the bookkeeping is a very huge market already. When I started in the firm, my employer is not doing bookkeeping. He is only doing tax filing, more focused on personal tax. And our firm is have a niche on back taxes. Are you delayed in your T1? Are you delayed in T2? That's the market we have. And last year alone, in the last quarter of last year, we're able to file 42 returns, purely back taxes. Imagine that's already late, very late, but that's the market that we have. Not 42 returns, 42 clients. So that's our market. So what I'm saying is that you have to understand first if you want to do, because a lot of Filipinos that I knew of wants to enter immediately the tax filing. They want to compare it to the US. They want to compare it because in the US you can file. Okay. But here you need to be located in Canada. You must have a social insurance number for you to call CRA. It's not the same approach as in Canada. So if you want to enter into Canadian market, you go first and understand the whole bookkeeping. Because who needs a bookkeeper? Number one is for the self-employed individuals and corporation. And also you can also add partnership. Any form of business that they're doing, they always need a bookkeeper. And in my case, I only focus on two accounts, which is Zero and QuickBooks. That's all I am doing. I don't do Wave. I don't do Zoho. I'm sure there's a market for that. Wave has a market for that. I don't know. I don't do those accounts. So imagine how many provinces we have. for Canada. And then you can always look at it. So it's a big opportunity out there for people. Why it's more easy to do outsourcing, especially if you're doing online, if you're doing bookkeeping for online software, it's really easy. And to do a proper bookkeeping, it's just very, very simple. You need to understand GST, taxes, HST, PST, simple lang. And then you need to understand how do you record your sales, sales on purchases, sales on GST on sales, GST on purchases. That's it. And then if you're doing a catch-up bookkeeping, which is a huge market out there, you just need to understand the taxes. That's it. And there are only few things that you need to understand also as far as government taxes related is concerned. GST, which is as far as the CR is concerned, is RT, payroll, which is RP, RZ is dividends, and RC, which is income tax. Those are the four aspects that you need to understand. Bookkeeping is a lesser risk. Why? Because if there will be a problem in your tax filing, it's not the fault of the bookkeeper. It's the fault of the tax filer, tax preparer, or tax CPA. Bookkeeper, you're just doing the bookkeeping. So my words always is that's why it's very important for me, you know your role. Because if I am the bookkeeper and there's a mistake, I always tell them it's not my fault. My fault. I just did the bookkeeping. I've done the reconciliation. It matches in the bank statement. It's a job of the accountant or the tax preparer to do the year-end adjustment, capital cost allowance, taxes payable, income tax payable. It's their job. So by knowing who you are in this daily personality, it's very important that you know you also your limitations. And every person, if you're a bookkeeper, pays differently. Okay, so everybody's paid differently. So if you're a bookkeeper doing tax filing, but you are not paid to do the tax filing, you should be paid for that action that you're taking, right? Because it's a different role. Higher. It's gonna be higher for you to do the tax filing. Tax filing is a very dangerous one. You know, I'll give you an example. One mistake in tax filing, resident, like non-resident or resident. Okay, so I have an experience that I did when I did the filing for him. It's a refund, $1,800, but I had tagged it wrongly as a non-resident, which is supposed to be a resident because there was a T-slips that we achieved, and now he ends up with a payable 2,500. So imagine the 1,800 refundable. Now it's going to be a payable. I don't know how to explain it to the client. But in doing bookkeeping, it's not the same risk. It's not the same risk. Doing bookkeeping is not the same risk as doing as a tax filing or maybe as an accountant. It really depends. So for me, the biggest market for Filipinos is really bookkeeping. Once you're good at it, then move upper accountant. And then if you still have a chance, then you move into income tax filing. But there's no shortcut. There's really no shortcut. It's a step by step process that you want to go. Okay.
Wow. Thank you so much, Sir Mark, for that insightful overview. And now we'll move on into our question and answer with him. And after that, we'll open the floor to all of your questions. First, we're going to ask Sir Mark a couple of questions regarding Canadian taxation. Sir Mark, what's the difference?
Dessa,
Okay.
before you continue, you just remove sir because we don't. I don't
Uh,
like it. Just remove sir. Just Mark or
Mark.
MTL. That's a yeah.
Okay. I'm not comfortable calling you just Mark.
Just MTL. You know.
Okay. Um, Mark, what is the difference between GST, HST, PST, and when do businesses need to collect them?
Okay. The way I always explain is GST is like VAT sa in the Philippines, right? Vatable expense. GST is something like that. So 5% federal. Everybody is 5% on GST. And Plus, there's a PST. GST is managed in the federal level. PST is managed on the provincial level. So provincial sales tax. So when you are going to pay a GST, it goes everything to the CRA. And we're going to pay PST, it goes to the provincial government. And the combination of both GST and PST is HST, Harmonized Sales Tax. Okay? And if you are going to learn about this one, go to, there's always a table that you can search online and look at all the tables, which is at which province or you have a GST, HST, or GST plus PST. An example for that one is British Columbia, where I am living right now. So basically, our tax here is GST. So we only charge GST for food, gas, and some other things. Um, all the ones in life, it's gonna be GST plus PST. This is the most important question that you're gonna have when you have a or you call it a discover call with your client is to know the province. You need to know which province are you from, which are you doing, where, which province are you paying tax, okay? So that you know exactly how much are you going to charge for that. GST, are you using GST, HST, or PST plus GST? You need to know. So once you know the province, then you know the tax that you need to charge. And then who will follow like if I'm an online seller, I'm based in British Columbia, online selling anywhere, right? So somebody bought in Ontario. So Ontario is at 13%. It's an HST 13%. What will follow? It's gonna be the rate of the buyer. Okay, it's always the rate of the buyer. So if I am from Ontario, what will follow is 13% in Ontario. So another thing is that GST, the same with VAT, you can deduct the input tax. Okay, what we call that in the Philippines, input tax, right? So you only pay what is the net VAT payable. I always advise my client that GST is not your money. Don't include it in your budget. Do not include it as part of your sales. Do not include it as part of your profit. The same way in the Philippines, VAT is not your money. It's the money of the government. Okay? So the ultimate person who is paying that is the consumer, the last person. And you are just a withholding agent, taking the money, deducting whatever you can deduct as you pay your expenses, and remit the same to the government. So it's not, I always use the word when I teach my team is that passable, pass. Pass the money until it ends up to the government. So same like that.
Sir Mark, I
Yep.
guess Isa have to ask question. She has a question regarding input tax credits.
All
Yes.
right.
Isa,
All right.
go ahead.
So what are the input tax credits, ITCs, and how can businesses claim them?
So
So that's a simple
basically,
question.
yeah, if you are already a GST registered, when you reach 30,000, you must be a GST registered. You need to charge, right? And every time you pay something, there's always a tax. GST, there's always GST. Again, if you're local here, it's always GST that you pay. Whatever you are paying, it's always being deducted from the GST collected. So ITC is an input tax credit on all purchases, business expenses. Okay, I want to clarify it's a business expense. Okay, not the personal one. If you buy clothes for your kids, it's not included. It's only the business expense. Every time you buy something, there should be a GST that is included in there. Okay, is if you buy something, is the PST included? Like in British Columbia, if you buy something, it's only the GST. PST is not included and is not deducted. It's a different story when you have an HST because basically HST you can deduct. It's more easy. It's more easy doing bookkeeping for those provinces with HST than doing um, bookkeeping for British Columbia because you need to understand what are the expenses subject to GST and what are the expenses subject to GST plus PST. You need to understand those. So ITC, whatever the total for ITC that you have paid for your expenses, you can deduct everything uh, uh, to the GST that you have collected, and you will only remit the net amount.
Okay, got
Okay,
it.
sir.
Actually,
Um,
um, we have
Isa.
a follow-up question here from Miss Irene Maravilla. How did you handle that mistake on tax filing? Filing it as non-resident instead as resident? Or can it be amended and pay no penalties?
First, you need to amend. You need to amend it because it's the rightful thing to do. Now, you have to explain to the client that you have to explain it to the client that you made a mistake and this is the rightful thing to do. The obligation to pay taxes is their obligation, not your obligation. But if you are at fault, like me, I am at fault, then I have to participate in paying the interest and penalties for that client. And it's just common for us here. If you make a mistake and you are part of that mistake, then you pay your part. That's it. But the obligation to pay taxes is not yours because that is the obligation of the taxpayer.
Okay. The third question is interesting for me. Kuya Mark, are there any special tax consideration for e-commerce and real estate businesses in Canada?
Okay. So in what aspect it should be looked at? So I'll explain to you the e-commerce. You're selling in the US. Are you charging GST? No, no GST. Can you claim ITC? Yes, if you're buying here in Canada. Um, so the way it works in e-commerce, I think the e-commerce platform right now is they are already deducting the GST and remitting the same, but we still have a lot of letter. The other month I received another letter for non-filing of GST, which is supposed to be it's the e-commerce like Etsy is already filing it in behalf of the customers. So if the sale, I'll give you the overview of the e-commerce during investigation. If they are investigated by the CRA, the CRA wants to know the location of the buyer, right? So they want to know is the buyer from the US because they want to know there's no GST there, HST or GST. They want to know what province are the buyer located so that they can uh, compute the proper GST, HST. So when you do the bookkeeping, always put yourselves in the shoe of the CRA. They want to collect taxes, right? They want to collect taxes. So just to make sure, put it in yourself like, well, this one is a sale in the US. What are the evidence that you have that we can tell CRA that this is a sale in the US and there's no GST? Because as far as the CRA is concerned, if you cannot provide justification that this is a zero rated sale or an exempt sale, whatever applies, then it's gonna be GST, HST, right? The burden of proof lies with you, the consumer. The same way in the Philippines that the burden of proof lies always to the taxpayer. Okay? It always lies to the taxpayer. You have to prove it. So when you do your bookkeeping properly, what I am doing is that I always do zero. I always group it together. Like if this is a U.S. sale, if this is a per province or Canadian inside Canada, outside Canada, I always do that so that it will be easy for me to justify. And then I use the tax codes because if you're doing zero, you can already see the per province and the tax codes in there. So it's very easy for you to segregate per province on your GST or ITC both. Okay, when I'm talking about GST and HST, it's always both your income and your purchases because both of them will get reviewed by the CRA. So there's the question of special considerations. No, as far as the GST or HST is concerned, for this kind, you still have to submit. They're still gonna investigate you. The biggest factor in e-commerce is that most of these sales, if you're doing e-commerce, I'm sure there's a lot of people doing e-commerce bookkeeping here. If you can see your sales, it's going to be more of the US, right? So it will end up in the end of the year that they are going to get a tax refund from the CRA. So if you're doing e-commerce and then your client will end up in a lot of refund from the government, then making sure you have the supporting documents because I'm pretty sure that they will investigate or review that before they're going to release the money. So I have a client who was just released with 38,000 ITC. It's a big amount they have started, but it took them almost 8 months after just to go through the investigation of CRA. So as a bookkeeper, it's your job to make sure that you are ready for any form of review by the CRA. As far for the real estate business, um, a sale of new home by a builder is subject to GST. Commercial property rental subject to GST except on long-term rentals. There's no GST, but special case, no, except on selling residential property, except on selling your residential property. Okay.
All right. Thank you so much for
Wow.
that. Next question is, what records do businesses need to keep for CRA audits related to sales tax?
Okay. So we have so many experience with sales GST review. Okay, clients come to us for sales review, and if you look at all the letters from the CRA, it's just the same. Like literally, it's the same, 100% the same. I only found one that is being added. So when you are doing GST, okay, so you're doing bookkeeping, right? So it's a, and then you have to know if it's an annual or quarterly GST. So if it's a quarterly, you can always do adjustments on the quarter as long as the year end, take note, year end sales matches with your GST sales. Okay? Year end sales matches with your GST sales. So I have this client. Um, um, she was the client, the bookkeeper of the client is a Filipino. And then I was telling this client, like, hey, client, you have to tell your bookkeeper to match this, right? So your sale, whatever is your sales, why? Because automatically the CRA will know if you're doing it properly or not. Imagine you have the same information. So whatever sales you have in your profit and loss is exactly the same sales you're gonna report in your GST, HST sales. Okay? So every time you receive a letter of review, it's always please provide. Number one is always provide the details of your business. What's your business about? What's the source of income? Are you selling the US? Are you using selling e-commerce? What's the platform? They want to know. Second is that you need to prepare. So when you're doing the bookkeeping, everything 1,000. Like what I do is that everything that is more than 1,000, I always ask a receipt from the client. More than 1,000. Same as expenses. More than 1,000, I always ask. The CRA will only ask the top 10 highest sales, top 10 highest expenses. Okay? And they will also ask your sub ledger. That's why it is very important for you to do the proper bookkeeping because you can only generate all this ITC, okay, in your QBO or zero. Common mistakes of my team is that the sales does not match to the GST report. Very common. Why? Because they incorrectly used the tax codes. The secret to proper or correct way of doing the bookkeeping is always on the tax codes. If you're doing the correct tax codes, then the report should be correct. And then you always have to do it. Do not end. Every time we review a bookkeeping job, we always review. That's the first instance that we're going to look like, is this match? Is this match? And then once you have the working paper, so my style is that I have a software zero, right? Everything is there. But I always download the sales report. I always download the sales report and do an analytics using an Excel. And then I compare the report generated in Zero or QBO to the Excel analytics that I have. Do the number make sense? Do the number make sense? I don't prepare a GST report in Excel. I let the system run the report, but I do the analytics on the Excel because that makes sense. Okay. So basically, I need you to understand that your sales and your sales in profit and loss and GST should match, and you should have enough information in there to how to submit the sub ledger in case of CRA investigation. And please make sure that all the major expenses and income that you should you should have a copy of the receipts, and tell the client always to have a copy of the receipts. Okay, don't tell the client to have a copy of the $2 Tim Hortons. Okay, it does not matter. It's very small. We're looking for the big numbers. Okay.
Wow, thank you so much for that advice, Sir Mark. What are the consequences of not filing GST HST returns on time, and how can businesses avoid penalties?
Okay. First is fear. If you are not filing, people feel fear because they're going you get some harassment from the area. Oh, it really depends. If the person calling you is an Indian, is an Indian guy, so they speak very strong, and then they feel harassment. So um, not filing GST or any kind of return, it's always fear. They are fear. I always feel the fear of these people coming to us. Some people are crying. Yesterday, he got a letter from the GST officer telling them that to pay this amount. And then, so what I usually do if you have a client like this is that you have to give them at peace. The only solution for not filing is filing, right? The only solution for not filing is filing. As a bookkeeper, always put all the reminders you have for your client, cell phone, email, whatever you're using. Always put multiple reminders to file your GST on time and avoid the penalty. So right now, they charge 250, but the 250 penalty is only applicable if they are sending a demand letter and you are still not filing the GST, and then they will charge you 250. But starting June 17 this year, 2024, they are now requiring everybody to file online. And I believe that strategy is going like next year, they're going to put additional penalty for non-filing, which automates the whole system. But right now, it's not yet implemented. As far as interest is concerned, if you owe something in CRA, may it be GST, income tax, or whatever that you owe to the CRA, you are always subject to interest. It's always interest. Okay. So, so other clients, I have a question. I received a question a few months ago, like, hey, can you do installment in GST? You know, tell your client if you believe that you owe more, you can always transfer. If you don't know, anybody can always transfer to GST. By a click of a phone, I can just transfer it from my personal bank account to the GST account. Okay? So every quarter, if you're doing annual, so if you're doing annual, I always come up with a computation on a quarterly basis that, hey, client, this is your GST payable. Okay, if you can transfer the same, then that would be great. Because once you transfer it to the GST, it's already there. In the end of the year, if you're filing because you're doing annual, if your filing will end up that you receive a refund, then the money that you put in the GST plus the refund will go back to you. So it's like a savings. Everything goes back to you. Okay.
All right,
So
sir.
once you have filed, everything just go back. So don't worry, tell your client. Okay.
All right, thank you so much for that, sir. With regards to that, how do you handle GST or HST for cross-border transactions, such as selling to the US or other countries?
So no GST, HST charge for the buyer in the US. So, but you can claim your expenses here, right? So it's gonna be a refund. So if your 80% of your customer is based outside of Canada, please expect that your client is going to have a refund. And if your client is going to have a refund, what will happen? The CRA will review you before they are going to release the funds. Okay? Anything that the government will pay you will always be subject to review. If you are not being reviewed, lucky for you. Okay? Every time you import coming in, you pay a GST. Okay? Every time you come in, you pay a GST. You buy something in the Philippines, when you come in, you have to pay in the what you call that? What you call this one? In the in the border, some pay GST. So every time because I go to the US, sometimes I go to the US in the border. I'm just 30 minutes away from the border. When I come back, they always ask you, like, hey, you buy anything because you need to pay a GST, HST on that. It depends on the province, on where you are located.
Sir Mark, how about nonprofit organizations? How does tax filing differ for nonprofits or charities in Canada? And are there any special exemptions?
Yes, nonprofit. I tell you, it's a good business. If you're doing bookkeeping for nonprofit, it's really nice. Uh, they are partially exempt from GST, HST. It depends on the kind of service. Um, but nonprofits as well may file annual instead of quarterly. Okay, so they can file annually depending on their structure and revenue. But here's the catch. I can expand your question to a better one. Um, I've been doing only bookkeeping for charity. Okay, I have three accounts I'm doing for bookkeeping for charity. The way it works here is very, very simple. The Canadian government have a lot of funds entitled to this nonprofit. So either you're a private contributor or government. So this is the what you call this. This is the thing that I want to pursue when I get my CPA license, is to really to focus on these charities and nonprofit organizations because I believe it's a huge market and unlimited income. What's the risk there? Nope. They just want you to do the bookkeeping. So if you are doing bookkeeping for charity, do not think of the taxes. Let them handle the taxes because it's a good market for the CPA. They have some funds that they need to liquidate. On your side, as a bookkeeper, you just need to account the money of the fund. So what I'm doing is if this fund coming in is from company A or fund A, and there's a specific expenses entitled to it, you have to tag it in QuickBooks. It's going to be tagged, right? Or track it in zero. You have to track it so that you can generate profit and loss per funding per funding. Um, as far as tax filing is concerned, I don't file taxes for charity, so I cannot explain that much. But I've been doing a lot of bookkeeping, and what I usually do is just to make sure that I can match the funds given in to the specific expenses that is intended for that fund. That's what I do.
All right, good to hear that from you, sir. What are some best practices for preparing and submitting documents for a CRA audit?
Okay, so as I've said, you have to understand who you are. Are you the bookkeeper? Are you the accountant? Or are you the tax prep? So this question is really literally I always usually like for people like us, which is based in Canada. But what you can do as a bookkeeper or an accountant, if you're doing the same, is really from the beginning, from the point that you are doing the bookkeeping, always put your shoe as if you are going to be investigated by the CRA. Okay? If you put there a Tim Hortons of $2, does not matter. It does not affect your profit and loss. Right? But if you put there something like capital expense of $1,000, make it sure that you have a receipt. Okay? Especially if you're doing um, a capital expenses, capital assets, capital cost allowance. The reason is very simple. If you're buying assets, computer, um, if you're building some renovations or whatever, that will go beyond the current year, okay? The current year of taxation. So it still affect the amortization, depreciation goes beyond more than 1 year, right? So you need to keep that receipt. Tell your client to keep that receipt. Why? Because at any point of time in the future, the CRA may investigate that because it reduces your tax payable for that year. So they may ask you to produce the receipt for that particular capital asset. Okay? So you can always you can always keep that, attach it in QuickBooks. If you have, keep that, ask the client. And if the client will tell you that I don't have receipt, then disclose it. Because again, it will run year after year as long as you are benefited by that kind of expense, either depreciation expense or amortization expense. Here we use the word amortization expense. So always remember that. And then regarding the documents preparing, very simple. All the huge amount, keep it, scan it, making sure that you do not change the client for $2 or $5. Okay. Meals and presentation is only 50%. Golf expenses, you have to make sure it's not it's business related. So a lot of people play golf. I play golf, and a lot of people. And then if you're doing the bookkeeping, your bank statement or credit card statement tells you a lot more. Like I can do my job 60% of it just looking at the bank statement. So just making sure that you upload everything. And then when you do your analytics, the way we do it in analytics is that we have an idea already that this is the amount. Like, the percentage, if you do a vertical or comparative of last year, then you look at it because it's the same way the CR is going to look at it. Like, for example, if you spend $1,000 on meals and representation last year and now you're spending $5,000, then try to investigate that matter. What happened? Did I make a mistake? Did the client make a mistake? Or can we justify this one? So always that. So preparation is about doing your job properly. Always do your job properly. Proper documentation, proper codes of the tax codes. And then by doing so, you can keep your client at safe. And there's no way that you cannot be get audited. You always have a chance to get audited by random, by mistake, or by matching. So there's always many ways that you get audited by the CRA. So preparation is the key, doing your proper bookkeeping.
All right, so that's a very comprehensive answer, Kuya Mark. All right, so I think we've covered some of the key aspects of Canadian taxation. That's it. So, guys, it's now your turn. We'll be opening the floor to you for your questions or anything you would like to ask, Kuya Mark. So, let me just check the chat box. Mm. We have a question here from Miss Jen and Caroline. What's the difference between US taxation and Canadian taxation?
I'm not familiar with US taxation, okay, but
All
I'll
right.
give you the Canadian one. You know the province, so that you will know your GST, HST rate, and each province have different provincial rate. We have the same federal rate as far as the income tax is concerned. We have every province has its own way to give credit to each individual or the business. So right now, last year when we did the tax filing for the T1, we have a $400 rental tax credit. So it does not apply to other provinces. In the other provinces also, they have the what you call this one, the um, carbon tax rebate, and then everybody here, if you're doing T1 tax filing and then you are below or within the range of persons subject to GST. So we have here the GST shopping, we call that one, the tax refund shopping dates and the GST shopping dates. So we always laugh at that because every time you file, if you have only one employer, if you only have one employer and you only have one T4, definitely you get a refund. So when you get a refund, you go shopping. And then if you get a refund for your income tax, so definitely you are going to receive a GST and it's going to be every quarter. So if you're a new immigrant here, so you can have the tax refund shopping and the GST shopping on a quarterly basis because definitely you can get those.
Thank you, sir. We have another question here from Charmaine J. Is Canada a high tax country? How many
Yes,
years go without filing
yes.
tax?
How many years go without? Well, if you don't file your tax, you don't get a GST, you don't get the social benefits. Okay. Me and my family are getting social benefits of $2,000 a month, for my kids, childcare benefits, and so I get 2,000. So I get to pay my rent from the government. I pay high tax. It started at 15% for corporation and goes up. Okay, so for me, it's a really high tax country. But I'm happy. I'm happy for paying the tax. I've been an accountant in the Philippines for 16 years. The biggest difference I have is that not because I don't pay tax. I pay tax in the Philippines, but here there's nothing that you can avoid tax. But because I have 4 kids, and medical is free, school is free. I'm happy to pay my taxes. And I had an incident that my kid got hit by a car, and when something happened like this, you just have to run. I ran without any jacket or anything. It's a cold country. I ran and everything, and I realized that I'm paying, even though I'm paying high tax, but there was an ambulance, 2 police car. There's so many people, government representative in there just to check the kid, and we get also psychologist for the kid and whatever they can give us to support that incident, and then ultimately done. So it's a high paying tax, but I'm getting my benefits. That's my point there. That's my point of view. It's not for everybody. There's so many Filipinos that are complaining here for the high tax, but for me, I'm enjoying my tax. I get to go every 3 months to the healthcare, get checkup, blood, everything. My wife get a free operation and all of those. It's only the dental that is very difficult, but other than that, it's okay. So
All right.
it's good for me.
Mhm.
High tax. Yeah.
Okay, thank you so much for that. Another question here is from Shona. Hello, Mark. Can you share to us some common bookkeeping mistakes in real estate in Canada so we can avoid making such, or what do we need to pay extra attention to with regard to real estate niche?
Okay, my wife is doing a lot of real estate. Okay, they're doing, and it's always a complaint. Your complaint is always the Filipino don't understand the whole thing, right? So my suggestion for you is just based on my wife, okay, because they have they call it one the remote support coming from the Philippines. First is that always think that the people here are trying to help you because it's a given already. You are not getting their job. As I've said, there's always a market for that remote or outsourcing part, and there's always a market for us here. So we are not we are not angry or anything. We're just helping you so that they are aligned. The problem there is that these Filipinos are not aligning. Okay, the always mistake is that you as an outsource accountant or bookkeeper is not aligning to their needs. So my suggestion is that first you need to understand whoever you're reporting with, what's the direction that you have, what's the plan, right? And then write all the procedure. Because in real estate, it's the same almost every month. You still have to close the books. Rental is everything the same. Collection is this, collection is always a repetitive issue. And I tell you, looking at my wife doing real estate management for these people, is I tell you, it's always a repetitive mistake because you are not doing your job properly. To avoid any kind of mistake, just put a no because in real estate it's the same, right? Unless they're doing flipping. But what are the market for real estate? Number one is that rental, property manager. Okay. I do bookkeeping for a property manager. I do bookkeeping for property maintenance, everything from paint, cleaning, everything, 8 buildings. So I do that. So it's always the communication and understanding because again, this is all repetitive. Every month is the same. Every month is the same. So if you make a standard in the next 3 months, that you can make a standard on the 80%, it's good to go. It's good to go, and you can avoid every mistake that you make. Okay, so I always look at my wife like now. I'm sure she's working. complaining about the remote support. But again, as we discuss always with my wife, that it's not a problem because we believe that there's always a Filipino that is really good, but if the Filipino is not helping to what you call this one, to make sure that he understands the whole thing, it's gonna be always a problem. And even with our clients here, if they're doing bookkeeping, if they have a Filipino support like a VA, there's always a problem. They don't understand each other. So you better sit. I think that there's a lot of coaches that are trying to teach you how to do a discovery call, how to understand each other. Then do it, and you can avoid a lot of mistakes moving forward.
That's
Thank you,
quite
sir.
impressive, sir.
We have another question here from Love Ibora. Do you recommend bookkeepers to study Canadian taxes, like taking up a course for better understanding, even though it is not our main job to prepare taxes?
Yes, it's better to understand. It really depends on you. I do as a tax preparer, accountant, bookkeeper, and I always define myself, which is my role for this job. Who am I? I always that. But yes, it's good to learn. It's good to learn.
All right.
Okay.
Next question is, can a bookkeeper record a transaction without the corresponding document receipt in Canada?
Um, if you're chasing a client for a $2 in Tim Hortons, yes, I think you can record. Right? So put something like more than 500 or more than 1,000. So me, I don't chase client for $2 or even $100. As long as in the bank or the credit card, there's always a description, like Tim Hortons, like Chevron, CHV, because I know the codes already in the bank. So you need to understand that the banking in Canada is very simple. Most of it is already in the bank description, but I don't change the small ones, only the big ones. As I've said, when you receive a letter from the CRA, it's always the big amount that they're looking into. So when you do your analytics, when you do your review on a per account basis in your profit and loss, always check. So what I usually do is that if I look at meals and presentation, I click it highest to lowest. Like how what's your, which of the amount is like meals and presentation are $1,000. They'll have a receipt. Or this one, good example, travel. Right? So I look at always the travel like payment to Air Canada, $1,000. Do you have the receipt on this? Aside from receipt, did your client tell you what's the purpose of the travel? If not, then let the client write all the purpose for that receipt and then scan it, attach it. Every time you go back, you have the explanation already inside the receipt. Right? Just put a note what kind of expense is that because you need to justify. Okay. Travel is always something that they want to look at because it's being abused. Meals and presentation is always something that they want to look at because it's being abused. Um, and you need also to understand motor vehicle, home expenses. What's the difference? How do you account? If I have a vehicle that is used for personal and for business, can I claim all of those? You need to understand those and what are the sharings and how you're going to record it in your books so that you can explain it to your client properly.
Thank you, Sir Mark. This question from Miss Gloria is so interesting. How should real estate investors in Canada handle depreciation of property assets in their books, and what are the tax implications of claiming capital cost allowance?
So, as I've said, if your capital cost allowance, mostly capital cost allowance will go for how many years? Okay, so this morning, no, last weekend, I have this seminar about CRA investigation, and our speaker is coming from DOJ, and it's really good. It's really good. So he always emphasized that if your expense is going to because depreciation or capital cost allowance will always go for more than a year, right? Always keep the receipt no matter what. Like for example, if you get audited on the 10th year, because 6 years you have to keep the receipt for 6 years, right? And you have on the 10th year you get audited for a property that is depreciable for 10 years and the CR is not happy or they want to review it, they can and they have the right to ask. What will happen if you cannot provide? What will happen if you cannot provide? Then they are going to disallow all of the years because you were not able to provide. the receipt for that particular or the cost that you spend on the expenses for the building. Okay, so it's going to be depreciation. Everything will play around the cost capital. So when you do a reporting, if you are a corporation, there's a capital cost allowance schedule, Schedule 8 in the corporation, or the CCA for the T1, then you have to put it there. So that one, as I've said, if you do the bookkeeping for them and if you have a fixed asset or capital asset, please get the receipt. Do not put a fixed asset or capital asset when you buy to Costco and your receipt is Costco and you put Costco in the whole amount. Never do that. So I've seen a lot of that one. So
All right.
documentation is very important. That's it. That's the bottom line.
All right. So another question here from Miss Cynthia Gatchalian. Are you planning to have a Canadian bookkeeping course in the near future?
Yes, we have already. I'm doing a PWD right now. I think this also organization, but I'm only focused on Canadian bookkeeping. I don't know about US. I don't know about other countries, but I'm just focused on Canada. I believe that by teaching, I get to master my craft. So I have I'm doing a PWD training. We're looking for the second batch. The fee for the PWD is, to be honest, because this is an advocacy that I'm promoting. Before I left to Canada, I've been advocating this. I only charge 1,000 for whole training. That's all the practical questions. If I'm not sure if I am allowed in this group, but I have another group which is focused on Canadian and academy. So I built an academy because I want to build better bookkeeper, Canadian bookkeeper, because I believe in the market. And I believe that PWD is equally the same for any normal people. And the fee is very minimal, but the training, I tell you, is really actual. We are on the, what you call this, on the third. This coming weekend will be our third, and fourth will be last. So it's very intense. I sometimes I forget the time. It's 4 hours doing all the trainings, which is supposed to be 2 hours only. So what can I do? But PWD is my advocacy. If you know anybody that is a PWD and is willing to learn, get some ideas because the first batch I'm never strict. But this time I'm very, very strict because I'm going to connect you, I'm going to help you to get your client. My advocacy is helping PWD. And I don't care how much time would it take me? My goal is to make sure that PWD is competent. On my regular class, my goal is to make sure that you're competent. You have actual experience, actual accounts, the way we do the filing, and all the mistakes we have. You know, you don't have to make those mistakes. We've done their mistakes. We want to avoid these mistakes, and we want to make sure that you avoid such mistakes.
Okay. We have the last question from Glenn Joy. How does the tax system treat income earned from investments such as dividends and interest?
You cannot go out with that. There's a T5. Okay, so all the investments will have reported. There's a way. Cryptocurrency is. I'm sure there's a lot of people here who is learning crypto. With coach. What's the name of the coach? I'm also an enrollee there, crypto, because I want to understand. Um, Other than investment, you have wealth simple investments. Big banks they issue a T5. Okay, any income, any income any income that is below 50 do not issue a T5. You can disclose it on your own, but that is something that you cannot hide. So every year, the banks or any form of investment institution will always submit a T5 to the government. Okay, T3, T5 investment income, and then it will appear on your income tax return. Income tax return, and you cannot go out. You have to declare it. Cryptocurrency, in addition to that, cryptocurrency is something, it's not yet, uh, it's already regulated in the government, but it's not something that you can match a document with. So I always ask for my client the document that I need. I only know one. I've been only dealing with cryptocurrency one account only. Yeah.
Wow, such a great questions coming in, Sir Mark. Thank you for answering them so thoroughly. But before we move forward, I have one more question that's been on my mind, something I've heard from other freelancers. I've been told that Canadian clients are often kind and generous and that they tend to sugarcoat things. How true is that?
I've been here for 3 years and I look at every taxpayer like exactly the same as Filipinos. I've been doing a practice in the back home for like 16 years. And every year that every year that I'm doing tax filing, bookkeeping, it's getting the same as Filipinos. So that's my opinion there. Like in any other country, nobody want to pay tax. Nobody wants to pay tax. And they want to use legal or some are being illegal ways to reduce tax. But this is my advice for you. In this country, the CRA can always get to your account. You have a lifestyle check. You have a lot of ways to check your income. They can look at your credit card. In the early months that I've been working, I have a client that is being the bank account is being put on hold, garnished. Um, and they cannot use it. So it's a real experience. So always tell your client that if you feel if you feel that your client is hiding, then be honest to your client. Like I always tell my client that, hey, client, I feel like you're hiding something, yeah? Your number are not making sense. I always tell the client because that is something that they cannot hide. But again, as I 3 years now, I think everybody's just the same. So I've been in the practice for 16 years in the Philippines, and then I thought that everybody here just want to pay tax, pay tax. But again, in the end of the day, nobody wants to pay taxes. Nobody wants to pay tax.
All right, so that's truly remarkable, Kuya Mark. And I'm really inspired by your wisdom, honestly. Is it okay if I ask question not related to Canadian
Yeah,
taxation?
yeah.
Okay, so okay, thank you so much for that. Actually, I'm just curious on what motivated you to move to Canada, even if you already have a good life here or a good practice here in the Philippines.
Wife, wife. No other, no other question. No
I
other
get
answer.
that.
Wife. 7 years. She's been asking me for 7 years. 7 years. And then I went to the US convention, Zero convention in September of 2019. My family is there and I just want to see the US. The head of Bepo is a good friend of mine. Marvin Galang and Jenny Galang is a good friend of mine. They teach me how to get 10 years multiple entry using Zero convention. So I get those. And then but I've been traveling with Zero I used to be a gold partner in Zero year way back 2016. And then so I was able to get my visa in the US. And then when we come back, I told them that if I go to the US and then I will decide. So we went in September. We decided in 2019 and then we decide the city. Like what's the city that we're choosing is either Alberta or Vancouver. And then I believe I don't have a job in Alberta. Maybe I'm gonna be a truck driver. So I don't know. So we choose Vancouver. I think it's a wrong city to choose. But it's my wife. I follow my wife. I
Mhm.
follow my wife.
Yes, I
That's true.
understand. All right. So,
Yeah.
yes, we're truly